Hello, it's Dave Knight from 123daytrade.com. Thanks for watching. Thanks for being here. Trading, day trading, and overconfidence. That's kind of the topic that I want to hammer a little bit today. Um, if you follow in the blog, you know I pulled out 72 tick win yesterday, being Wednesday, November 16th. And today I'll follow up my win with a 40 tick loss on 5 trades. And I can look back at a specific period of time where the emotions and the overconfidence overruled the trading decisions. And in my mind, I was saying, I'm good, everything's fine. But I wasn't trading the trading signal. Now, the trade that I really liked, if you go to the blog today, being Thursday, was my short at 46.99. I really liked that one, and I liked the short at 46.93. And I also liked the Bugs Bunny trade that I put on a little bit later in the morning. But if I would have waited for the market to show its hand instead of trading the first 2 trades, what I've got to get away from is when the market is not showing its hand or it hasn't shown volume which way that it wants to go, then I need to be on the sidelines firmly. So if I look at my first 2 trades I took this morning, my first one I think was at 8:02. I mean, that's even before the 8:05 mark. I'm okay with taking a trade inside the open range between 8 to 8:05, but I need to have justification to take that trade. Now, the justification that I told myself was things that happened at 5:22 a.m. way back when applies to this morning at 8 a.m. Central Standard Time. Not true. What I've got to get away from is looking too far in the past to make decisions at that period of time. So, if I would have just waited right at 8:33-ish, 8:32, 8:33, somewhere in that area, there comes a blue bar volume and it's over 2,000, and that was when I should have initiated my first trade right around that period of time, and it should have been a short. So the trade opportunity, it popped up quickly, just kind of to get the week longs in and to cover some weak shorts, and then it proceeded to head back down, and the volume told me which way it wanted to go. I was in at 46.99, and it stopped me out to the tick at 46.09, and it stopped me out at 40. Was it 40? Hold on. I'm even saying the wrong numbers, I think. Yeah, 46.99. The market goes up to 47.09. The high at that point, I believe, was 47.12. Now, if that would have been my first trade and I would have had my 13 tick or 2/3 stop loss, or put it above that 47.12, make the market go above that area, then I would have been fine. So, it's the woulda, shoulda, coulda side of the trade, to where and what I can attribute the losing day to was the first 2 trades set up the rest of the day. It put me where I was already down 18 ticks. In the back of my head, I'm going, I don't want to get. I kind of created my own monster, I guess, is the long story short on today's trading session. There was no indication the market wanted to do anything until after that bar comes out, like at 8:32, 8:33, whenever it comes out on the trade itself. At that point is when I should have initiated my trading sequence at that point, and not before. So obviously I'm recording this video not only for me, but those that have asked. My youngest son has some interest in trading, and I'm just put the video blog together to help him. I don't know how long I'm going to live in this lifetime, but what I can do is document my trades and my errors to hopefully help him so that he doesn't create the same mistakes that I did and obviously what I want to do is shorten his learning curve. Day trading sucks when you're doing it wrong, and it's the best thing in the world when you're doing it right. Yesterday's euphoria turns into today's devastation in a sense, right? Those are the kind of things that you got to get away from. The overconfidence, and I came in to it a little bit too cocky today. And honestly, and that set up my trading session. I was on the little bit on the cocky side. I go down minus 18 ticks, and then I'm not able to stay in it. It knocks me out right at 47.09. I have a minute 46.09, 46.99. It goes up to 47.09, right to the tick, takes me out, and it doesn't go any higher, and it goes down 3p all the way down to 46.28. It hits my 3p target where I could have had minus 18 and plus 71 or 70 ticks. So I could have had a $500 trading day. Today should have been, so the woulda, shoulda, coulda side of this day should have been plus 500, and my account should have been up over $1,200 on funded day trading 3. Now I'm sitting at plus 264, or no, excuse me, plus 260 and change right now. So that, and it's all into one tick. One tick difference makes the difference. But I look back at it, it was the opening 2 trades that caused the rest of the losing day. All right. I hope you learned from it as well if you're listening to me and you like to listen to this kind of stuff. Honestly, I hate putting this shit out. This is the kind of stuff that I hate recording because, but I'm not perfect. I'm not a master trader. I'm a journeyman trader at best, and I'll always be that because I'm always, day trading, when you're on your game, it's the best thing in the world. But when you're off your game, the quicker you can realize that and stand aside. The only thing that stopped me today was I knew I couldn't go past $500 in the funded account today. So I close out the day minus roughly $475. So I give up pretty much a little over half of my gains that I had accumulated over the last 2 days. So that's the kind of shit that really starts to get to me and eats me. So that's what you have to learn from and stop. So and to be right but wrong in timing is still wrong. You're still wrong because at the end of the day, what you're judged by is what that ending account balance says and nothing else. All right. God bless. Take care, and I'll see you on the next video that I put together. Bye for now.